Hello, everybody. Good evening, and welcome back to the BD4X YouTube channel and to a new episode of Sniper Sundays, episode 9. So, I hope you're all well, had a good weekend, ready to get stuck into a new week. Um, um, this week, I'm going to be going to show you, I'm going to show you and recap on last week's analysis so we can all understand and learn from it. I've got the US dollar index here in front of me once again. So I'm going to break this down. Looked a bit confusing at the moment, but don't worry. We're going to break it down. But I'm going to recap over last week what I analysed. Um, it's very, very important to always look back at what your analysis was the week before, see how it played out. And you're going to see here that if you just take your time and have some patience and allow your analysis to play out, more often it will, rather than getting too caught up with the smaller movements during the week or on the lower time frame. So on the higher time frame, we're going to see how well our analysis played out from last week. And as I said, if you want to learn, I recommend you looking at the charts as they currently are, maybe clearing off your charts if you need to, or just as I have them here. And look, going back to last week's episode 8 of Sniper Sundays, going back to that and then seeing how price arrived. I'm going to run through it here, but also doing it by yourself so you can see how we had the analysis, how we got to where we are now. So you can basically just break it down and learn and understand, because that's what this is about. Obviously, you can give some trade setups and create trade calls, but I really want you guys to learn and understand the market better, understanding the market structure, how the market moves, and therefore being able to predict the moves before they happen, just like we did last week and just like we're going to do for the week ahead. So the US dollar index that I've got in front of me here was a big talking point last week, and we can see why. For anyone who traded the market, we have a good look through the market, what happened last week, and basically what we can see in front of us here, and we can see why the US dollar was a main vocal point of last week's episode. So basically put emphasis on the fact that the US dollar was going to be a major part, or play a major part in the market last week. One of the other main points I made last week was the current market conditions. I'm just keeping this here on the 4-hour and the daily at the moment. I want to just clarify this point as well. But one of the main points I made last week was the current market conditions, which were the current type of market, which was at the moment ranging and not trending. And I explained that we could very well just continue to continue to range for the next couple of weeks. So the market was here at this point on the last Sniper Sundays. As I explained, more than likely going to see the market just continue to range. And there was various reasons for that. It was the time of year. Remember, we're in August, holiday season, less momentum, less volatility in the market. And also that there was no news, no fundamentals, nothing real high impact on the economic calendar to change the direction of the market or change the trend. So just want to recap on that now as we start to look at this market and just show you, by taking all of those things into consideration last week, could have either saved you from taking a bad trade or helped you get into a good trade. So across the board, the market was very much ranging and choppy. We can see that throughout. We've got Euro USD here. I'm going to go through all of these. Euro GBP, you see ranging here, Euro USD ranging, and the dollar index ranging. GBP USD was one of the worst ones for ranging, which we'll get to in a minute. But yeah, across the board, the market range was very choppy in areas. I wasn't actively trading myself. I was concentrating on the updates for the community, as I spoke about in the last episode. But this week coming, I plan to trade every day. I will be. Let me just quickly. I'll be planning to trade every day from tomorrow onwards. Intraday trades, potentially swing term trades, but I do predict it will be mainly intraday trades because of the type of market that we currently have. But we'll only be trading if there is actively trades to take. Not taking trades just for the sake of it. Not going in and searching for trades. Only if the market gives trades. Remember, we do not need to trade. In the community, in the last 3 days of trading, we made over 30%, so 20% in 2 days, 2 weeks ago, and the week after that, we made like 10% in a day. So there's no need to go looking for trades. Also, one of my main reasons for last week, I'll just quickly go to my Twitter here, guys. As I said, I will be actively trading every day this week if there's trades available. So I'll be tweeting these and showing these on my Twitter and also my Instagram. So go over there and have a look at the trades during the week. But one of the reasons I was also not trading so actively last week is I did post a picture here that I actually bought a new property. Um, and Twitter's great because it gives me a lot more chance to interact with you guys. And I just put up there like, would you guys like to see more about property and investing? And there was a huge reaction, huge feedback from that, saying from you guys saying that you'd love to see that type of stuff. And I've just explained here. There's so many different aspects of property, from how you buy it, planning permissions, building, renovation, whether you're renting or reselling, etc., etc. And you guys have seemed really interested in that. I had some great feedback on that on Instagram. So I'm going to be showing you that basically from next week onwards, because as I said, I have just bought a new property, and I'll be getting to work on it as soon as possible. So yeah, follow me on Twitter, BD4X underscore and BD underscore FX on Instagram, and I'm going to be showing you a lot about the property side of things, and I'm also going to be showing you all my trades as we look for the week ahead. So hoping to have a busy week. Now let's break it down. So what have we got in front of us? The US dollar index. What are we going to start off with, guys? So if you watched last week's episode 8, what did we start off with? What do I say I always start my week off with? I always start with the US dollar to see how that is behaving, how it's behaving for the last week or so, or a couple of weeks, because that will give us a good insight as to what's going to happen in the coming week. Remember, the US dollar, it affects the vast majority of the forex market. All the major pairs are penned against the US dollars, like Euro USD, GBP USD, Aussie dollar US dollar, and so on. But then also, remember last week what I said as well was taking into consideration the economic calendar. I've had a look through once again, and there's very little coming up this week. So again, we're really sort of at the same scenario as last week. We're in the middle of August, or coming towards the end of August now, the holiday season. Things normally start to pick up a little bit more in September once the holiday season's sort of over. We're currently in a ranging market where the market's just bouncing around within a range, and then we've got to look ahead and see, is there anything on the economic calendar that is going to help the market get moving, be a catalyst to sort of get the market moving, give it a kick in the right direction. But as we can see here, Monday this week, we've got no high impact news. Tuesday, very little, no high impact. Wednesday, same again. Thursday, we've got a little bit of news coming from Canada. The Jackson Hole meeting won't really affect the market. We don't expect it to make the market too much. And then we've got the Pound, Bank of England speaking on Friday. So very quiet at the start of the week. So I can still expect this week to have the market bouncing around within the daily ranges on the whole of the week. But even at the start of the week, Monday, Tuesday, Wednesday, we could see the market sort of bouncing around between sort of 1 hour and 4 hour ranges, because there's nothing really to get the market moving. So let's have a look at the US dollar. So here, the US dollar, this will hopefully sort of train your eye and make you understand a little bit more of what you can look out for, and how you can look for sniper entries, and what do you expect the market to how do you expect the market to move. So here at the moment, I've basically not touched my charts, which I'm going to show you today, guys. So I'm basically just going to breeze through these charts, but I've kept them basically with the same analysis which I pointed out last week. So if you want to compare this week's episode to last week's episode, it makes it very easy for you guys to sort of compare and understand what I'm talking about and where we've got to. So here you can see that I actually had this highlighted down like this here on last week's Sniper Sundays, with this liquidation zone below the last two lows here. Prior low, support, 92.50. Explicitly said that we could come down and we are going to come down into this region here below 92.93. There was 100% going to push down below this level, and then whether we can come down, take out this liquidation zone, and then have a reversal. Now, just as a lesson and just to learn, guys, here you can quite simply see how the reaction that we got from here, because this area is liquidation. Stops have been taken out here, and then big money has moved into the market and took this up. See how we trickled down, came out, took out any, what I mean by liquidation, any trades where there may have been a stop loss sitting below here. They've now been taken out, as you can see, spike to the downside just to make sure we clear anything, the market clears anything out before reversing to the upside. Now, on last week's Sniper Sundays, remember this is only this on the 4 hour, I highlighted this to explain that at the start of the week, we may see a little pop up into this area to try and take out this prior high. On market open, you never know what might happen. So we had to just understand that there was room for this to potentially push up a little bit more before the US dollar sell-off. And we didn't have that little pop-up. We just sold off straight away. We just sold off straight away, as you can see here. This is where price was. Market opened here, slight little gap there, as you can see. But the market pushed down and took out that liquidation zone. That's all the market wanted to do. As soon as it opened, pushing down, and then bang, took out that liquidation zone. And then what happened? Bang, we moved back up to the upside. Now, I had this highlighted like this because I'm highlighting the range that we're in. We go to the daily chart, you can just see that what we mentioned last week, we're clearly in a daily range. I'm going to just move away these arrows for the moment, but you can understand that the market has moved exactly how we anticipated it to do. To come down, move into this liquidation zone, and from there, once you know that the liquidation is taken out, we see the signs, 4 hour bullish engulfing here, for instance, as you can see on the 4 hour chart, even a 1 hour bullish engulfing here, you can see here that then there's the opportunity to look at taking trades and looking for a push back up. But having the patience to wait for this move, not jumping in early in the market, not just looking for a trade, understanding how the market works, and understanding in order to see this big push up and to see the bullish move, that we needed to see price come out and take out these prior lows first. And another easy way to show that is basically manipulation to take out the prior lows here at the bottom of this range. Now, looking for this to push back up potentially still next week. I'm just going to move these arrows away and just move these levels of support and resistance away. Well, here you can see we're finding resistance from prior resistance here. I'm expecting a weaker US dollar initially at the start of the week to push back down and sort of retest this support level here. We'll come back down to 92.50 monthly support. So here we've come up, we pushed down lower, made the higher high here, a higher low. We're making a higher high. I'm expecting price to come back down and test this area. We can test this area and we find support. This is going to show us that this level can hold as support and we can see a push back up to the upside. It will also show us this sort of really nice head and shoulders formation on the 4 hour and daily. So you've got a left shoulder here, a head, and then a potential right shoulder to come back down and fill this level in again. And should that hold again for 1, 2, you can say this is acting as support here again, 3, 4, comes back down and retest here and holds a support, we could have a look for a push back up. However, what we need to just see here, guys, is we are effectively in the exact same position as we were last Sunday. We're around the same area. Right? As I explained, even though we're in a range, we are still very, the US dollar is still very weak. And understand that this coming down and making a new low has actually also created a new lower low. So this coming back up and making a lower high, we could easily just see a sell-off again. So therefore, though I think it can pull back, the smart trade is taking the short trade on US dollar, because as it comes back, if this doesn't hold, we break down lower and we come down and make a new lower low. So what I'd be looking at the start of the week would be looking at selling the US dollar, not on the dollar index here. Obviously, I use this just to understand the market, but I'll be looking to sell the US dollar on other currency pairs. So we'll be seeing how the market starts off. You see here, we just tapped into sort of this little liquidation zone that we've got across here, but we can look at the market coming back down into this region. Now, I was just clearing all of this off just to flick back to the weekly chart as well. This is something that I showed you last week. I said, when I have these Sniper Sundays, guys, there's things throughout which you can note down, some little hidden gems and so on that you can just put into practice on your own trading. Something that you might hear that you've not heard before, you can start researching it, back testing. And as I explained here, we had these 2 wick candles here, and I expect the price to come down and fill in these. Price is very, very heavy. You can see how the market is weighted, very, very heavy, pushing down on the bearish push. So I expected these 2 prior wicks to be filled. and you can see here prices come down, filled those, and took out this prior high. So currently, what I'll be expecting is potentially a little pullback like this here. This level would have to hold a support. If it holds a support, you could be looking at a long trade on the US dollar, which I do think can pull through. But at the start of the week, I'll be looking at taking a short, potentially taking some profit around this area, and then looking at a hedge trade long and looking for a push back up. So let's have a look at the US dollar at the moment. So again, the Euro US dollar has played out pretty much as explained. So this is what I'm looking at the moment. But we'll just go back to the Sniper Sundays last week. So Sniper Sundays last week I didn't have this range highlighted. I had this area of liquidation, or this liquidation zone highlighted. So what I was looking at for here, again, just like the weakness on the US dollar, I explained that this was more or less 100% going to push up into this region. And then I'll be looking to come up to around the 1.200 level. We came just shy of that. But what you can see here, again, by learning, is that what has happened here is you come up and taken out the prior highs. Now, remember last week I explained that 80-90% of the time, before making a reversal in the market, 90%, maybe even more, will take out the prior highs. So price is trading around here. Be very, very careful, be very, very patient. A lot of people can look at taking short here. So we had a resistance, we came down. Here brings in the normal retail trader to take a short trade here. And that's why I know that the market is going to move up into this level, take this level out at least before moving to the downside. But a great chance that the stop loss, it may just push up and take out the stop losses sitting above here. What the market does is makes resistance. What do 95% of retail traders call this? A double top. What do 95% of retail traders do? They take a short trade with a stop loss just above. So they might be in profit for a little bit, looking for a swing trade. But what does the market do? It comes up, and do you ever find that if you have your stop losses placed in places like this, the market often can come and take you out, and just after you get taken out, then it dumps in the right direction, or moves in your desired direction. So you've just been taken out by a few pips maybe, and then the market moves in your direction, because the market knows where these liquidation zones are and knows where these stop losses are being placed. So by me explaining this to you, you're going to start to understand this and see and learn, and to have patience and to wait a little bit longer and wait for these moves to happen. Because if you take a short trade here, then you can see you can have a shorter stop loss. These are on swing trades, not intraday trades. But you have a smaller stop loss, and then you can see you can have a bigger move down. So Euro USD has played out as I explained, as said. We moved higher. We broke above this resistance here, moved up into this liquidation zone, and moved up higher. I did think that we could potentially come up and hit that round psychological level, but as I said, it came just short. The bears have stepped in, and at the moment it looks like Euro USD wants to push down. However, I think there's going to be, as I said, that US dollar weakness at the start of the week. So what I'm expecting is the US dollar to weaken off. So remember, US dollar, if we're expecting US dollar to push down, we can expect Euro USD to push up. And we're looking at coming back up into sort of this liquidation zone here before any type of sell-off. So the smart trade here with Euro USD is to actually take a long trade from around these levels. You can see here, we talk about liquidation zone, you can see we made a support, we came up, made resistance. See how we just dipped below the support here, and we've just come that little bit lower, and now we're getting a 4-hour bullish engulfing here. Haven't taken this out, spiked below, and now we're having a 4-hour bullish engulfing, and it looks like we can push back up. Now, I say the smart trade, just like I said on the US dollar index, the smart trade is to sell the US dollar at the moment. Why is it the smart trade? It's because that is in line with the overall trend. Remember, the trend is down, the US dollar is weak, so therefore there's no real signs of recovery just yet, and there's nothing in the market coming to make the market change direction, because there is, unless something happens during the week, which obviously can happen, but on the economic calendar, there's nothing to make the market change direction. You can see here, we're very, very bullish at the moment. Market's having a breather, resistance support. Just as I showed you that we got a little bit of we're basically trading within a range, but we just popped above it here, took out the previous liquidation above. But you can see here that the market is more or less still just moving in a range, and we need something to happen in order to make the market change direction. So we need something to happen for the US dollar to help that move. Now, so where we've dipped down lower here, depending on how the market opens, we could be looking at potential long trades from around this region here. We dipped below here, taking out this liquidation level. There is always still at the moment, there is the potential for this to try and push down and take out the liquidation zone. Where do you think, guys? At the bottom of the range. So coming down to sort of this area here. So there is the opportunity for it to dip down into this level, and this would provide a nice buy, long opportunity to look at pushing back up. I do think that before we see a move down, this level, I'm going to highlight in red, this level is going to be tested. So I'm expecting price to, from around these areas, I'll be watching the market open, could potentially sell off slightly, but from here I'm going to be looking for a push back up into this region, and only from here would I then look at taking any potential short trades. You can also see here, just stretch that across, it's sort of a left shoulder, head, potential right shoulder, just like on the US dollar index that we said, left shoulder here, a head, and a potential right shoulder before reversing to the upside. A head and shoulders formation, of course, is a reversal sign on the higher time frame. The higher the time frame, the stronger the sign, the sign or the pattern is. So definitely expecting EURUSD to come in, tap into this region. We're watching on market open to see if we might have a little bit of sell-off. We might gap down slightly or something like that. This would be a very, if we came down and tapped into this level, we might find very, very strong push back up, and we may even come up and make new highs and take out 1200. This is why this is the clever trade, because you're going in line with the trend. So therefore, if this is a high, this is making a higher low, then we can push up, take some profit as we get into some of these resistance areas, and then hold a percentage of our trade to continue higher and maybe even make new highs. But definitely expecting price to push up into this liquidation zone. I'm highlighting red because I'm pretty sure that we're going to see price push up into here. So I'm expecting price to push up, and from here I'll be watching later in the week. If I said the US dollar, you want to be cross-referencing with the US dollar. The US dollar finds support here. You might see a fake break of this trend line that you can see that I've drawn on here. But we may remember, this is the important region. This is the very, very important. This is a new sort of 4-hour and 1-hour trend. Higher high, higher low, higher high. In order for this to not be invalidated and to continue to be valid, then we need to find support here, and then we can push off. If that happens, then we can look for the short on here, EURUSD. But I'm looking for that push up at the start of the week. Euro GBP was a choppy one this week. You can see just sticking within a range. At the moment, I think we can still see a move up higher. But I just explained. Remember, I had a trade on last week, and I was happy to hold it. I explained, I showed it on Twitter and so on. I haven't got the exact trade here. I've closed it now in profit. I gained an extra 1-2% by having the market was at these levels at the end of Friday's close the prior week. We dropped down on the Friday, pushed back up, but I was happy for price to push back up. I knew price would come into this liquidation zone. Therefore, I had the confidence to not have to worry about a trade or have any sort of stress. I know where I expect price to go, and therefore I was happy to hold on to the trade, because I knew that we could come up and I could gain, because my stop loss is so tight, that I could gain that extra sort of 1-2%, and I think it was a 7% trade all in all, to pushing back up into that region. So you can see here, price came above, liquidated the area above the prior high, took that liquidation before to make that move back down. Now, what has happened again? Price has come down where? Below the prior low. You can see here. And now what has price done? Liquidated that area. We've had this. See price action, guys. A bearish candle like that. Textbook, especially on the 4-hour, textbook will tell you that this is a sell. If you break a support, that this is a short trade. But what's happened here? Bang. Again, this is the liquidation zone. People will have long trades with stop losses Retail traders have stop losses with just below the prior low, so they've been hit. And then 95% of retail traders will take a short trade here, and then they've been hit. So he grabs people from both sides of the market. You can see the quick move, and now we look like we're pushing back up to the upside. So I'm expecting Euro GBP to come back up again once back up to the top of this range. Remember, why am I thinking this? Because look at the current way the market is behaving. We're in August. There's no real volume. There's no real movement in the market. Price is just bouncing around within the range. And we can see here that we've had this strong move, liquidated this prior low. So I'm expecting price to pull back down, potentially retest this area as support. This holds as support, then it'll be looking at a nice move back up into the 0.9060 to 0.9080 region, and potentially higher. Last week I was expecting this to move up a little bit higher, but you can see here as we got into that liquidation zone, there wasn't the strength to push up. So I'm looking for a push up higher, so potential some pound weakness at the start of the week. Euro AED is just a pair that I'm not planning to trade this. I'm just showing you this pair just to kind of give you a visual representation of what the market is like on many pairs at the moment. This is the daily chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 17, 18 days stuck within this range. If you take the main body of these candles here on the daily, you can see what will be moving. We're moving between 100 pips for, what did I say, 19 days. This is usually quite a high volatile pair, Euro AED, but you can see here that this is what you're up against at the moment. So if you're taking a trade, don't don't go too far with your predictions, because you have to understand that the market isn't really trending at the moment. So therefore, if you're up 50, 60, 70 pips, you might want to start taking some profit, because you could easily be 100 pips up and then all of a sudden, bang, you're back down to 10, 20 pips or even break even. Same here, you can see you could have sold, looks like it's going to break. Your analysis might be telling you that this is going to come back down, but then it pushes all the way back up and you've lost those 50 to 100 pips. Whereas if you just take the market for what it is, something I said last week, you take the market for what it is and understand that the market is ranging, be happy to take the 50 pips. Let them add up. A dripping tap fills a bucket. Drip, 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 drip. The bucket will fill up. So just take a little bit out the market when the market is being like this, and slowly your account will fill up. Your pip amount will fill up and your percentages will fill up by just taking a little bit out the market. Now, I don't actively plan to trade this pair next week. It's certainly not at the start of the week, but you can see here how choppy it's been. It's just bouncing around and it's bouncing around. And I said I just wanted to show you that just to see what you're up against on some markets. So this is on the daily. As I said, let's just have a look at this on a 4-hour. Nice little evening star formation here. Pushed back down. Most people, let's just say most retail traders, if you're taking a short trade here, your sort of ego or your hopes and dreams of people have for trades, to think, right, I can see this dropping down and breaking all these supports and so on, and making loads of money. But you need to understand that you're within a range. So you come down to the previous support, you want to take some profit, because what's happened at the previous resistance hasn't been able to break higher. Previous support hasn't been able to break lower. So this could, along with the time of the market, I said August and so on, you want to understand that the market isn't trending as it normally does. Let's have a look. Euro JPY is one I think we could potentially look at long trades this week. Let's quickly go to the weekly chart on this. So the weekly chart here, we've had a bullish engulfing, we've had a bearish candle last week. Remember, on any candle, we normally will see some price action pull back on the next candle, and not just see a drop off completely. So I'm expecting to see a pullback on this bearish candle. So we expect to see a retracement at least before seeing any further sell-off, if any. But at the moment, again, the smart trade, what's the smart trade here, guys? It would be to take a long trade, because higher highs, higher lows, higher highs, higher lows, higher highs. The market is trending. Euro strong. Japanese yen is weak here. We've had a strong, a bearish week last week, but in overall, what can we see here? This is the daily chart. You can see that just by clear market structure, the simplest things, are always the most effective. Higher high, higher low, higher high. If this higher low stands, then we're still in a bullish market, even though we've had a bearish week. We've had 5-6 consecutive bearish days, but we're still in a bullish market on this pair. So what I'll be looking for is, this is what you could call, any areas I have highlighted in yellow like this, usually liquidation zone. So we can expect this price to potentially just drop off slightly on market open. And from these areas, I think we can be looking at taking a long position back up, where I would be looking for price to come back up, take out this support at little resistance at least, and maybe even come back up into this sort of left shoulder head, and potentially make a right shoulder, where then I'd need to reassess the market once it gets back to those levels. Here, it could be a nice little, if we are going to see a change in direction, it could come from this region here, and should just come back up here at 61.8% retracement area over here on the Fibonacci. But at the moment, what I'm expecting is just, yeah, we might see a little just drop off into this liquidation zone early in the week. See what these wicks here to the left as well, in a sort of area of resistance. So you can see a little drop off here and then a push back up. So I'll be looking for a potential buy trade here on Euro JPY. Euro JPY. GBP USD was a bit of a messy one last week. I think I said at the start of the video, it's potentially one of the messiest trades or messiest pairs this week or last week. Sorry, I'm just moving something here. It looks like it's set to come lower, but I just want to quickly break through what happened last week. So let me drop down to the lower time frame. Again, I want you guys to learn, so I'm just recapping on everything. Now, last week I explained that I could potentially see this pair coming down into 1.300. And coming out, taking out these prior lows, coming down into this level. So I called sort of 1.300, and wanted to see a break of this counter trend line in order to see that move back down. To see this move, to break this counter trend line, to see this move. Now what we didn't see was that break. And we can see here that on market open, we actually came back down. And do you see what happened here, guys? Ever so slightly on the lower time frames. It happens on lower time frames and bigger time frames. We came out, took out this liquidation level here, and then we sprung back up to the upside and went to take out the prior highs. So I was explaining that I'm expecting this to sort of pull back before a bigger move back up to the upside once again. But here, we just take this away. This is on a 4-hour time frame. Just take this away. We can see we're basically still stuck within a range on this pair as well. Price tried to move up higher, pull back down, try to pull back up, pull back down, sort of all over the place. As I said, I do expect more upside over long term on GBP USD, but I'm expecting to see this potentially see a bit of US dollar weakness maybe at the start of the week. Could pull this back up maybe to the top of this range. We do have pound news coming next Friday, but I'm expecting pound, as I said, longer term to push up. So we could potentially see a push back down into this region, into this liquidation zone, and then look for a move up. Now, I just want to clear off this chart and just show you what I mean by this pair being one of the messiest. Go to the daily chart. Remember, always check the daily chart, guys. Always remember, check the higher time frames. Now, if this wasn't messy enough here, I think we looked at this last week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Just throw a quick range tool on this. See how effective this range tool is, guys. Just visually shows you so much. So we're in a range here, evidently. But then what happened this week? Tuesday, bullish engulfing. Wednesday, bearish engulfing. Thursday, bullish engulfing. Friday, bearish engulfing. Up, down, and stuck within even another tighter range at the end of the week. So very, very choppy. And sort of up and down and all over the place. Now, I said it's ranging. However, higher highs, higher lows, higher highs are still being made. I still think that we could come down here on GBP USD to that 1.300 level. Why am I looking at that level? As you can see, come down, there'll be a liquidation level to come down and take out these prior lows. From here, we could see a sharp reversal and then move back up to the upside and even come back up. I have had my eyes set on a level here at 1.3500 long term, ever since we had this all-time lows back down here, which is explained to my community why. And if we just look at higher time frames, you see what I talk about liquidation areas and so on. You see here we liquidated this low here, and now eventually I'll be expecting price to come up and take out this level of 1.3500, as you can see here. So eventually I'll be looking for that. So longer term, I am looking for push up, but we could, in order to get that momentum to push back up, I do expect to see some short-term weakness and look for a push back down here into perhaps these regions at the start of the week on GBP USD. GBP JPY, following on from last week's, this is what I expect this week, which I'll get to in a minute, but following on from last week's analysis, explained on if we could get a break of this level here, or get a break of this level of support, which I knew we were going to do. I was explaining then on a pullback, we could look for a short entry to look at taking a short. Now, the pullback was pretty steep. We came all the way back to, just get this out of the way for the moment, just so I can make it a bit more clearer. We came back to the all-important 78.6%. Remember, we don't want to pass this, otherwise it's no longer a retracement. It's a continuation. So we came back on here. We'd want to be looking at a stop losses above the 78.6%. Obviously, just above 140.00 would be safe as well. But as explained, a break below this level of support means that we could look at taking short trades on GBP JPY. This pullback, 61.8%, just tipped a bit higher to the 78.6. Then we saw a nice sell-off. Then we came all the way back up again, back up to that 78.6, very choppy, and then we sold off and pushed back down, and we've now made a new low. You can see here, this is my liquidation zone, or the area that I anticipated seeing GBP JPY push down to last week. We're nearly there. We're not too far off. You can see here my first Fibonacci extension and the second. I'm expecting price to continue and push down into that region. And as I said, with pound, we'll have to see how the pound behaves. But overall, I still think that there's still more upside for the pound. So therefore, if we come down into this area, tap 137, we can expect from here to at least find an area of support. So I'd expect to see a retracement from this level. So there could be looking for a long entry from around these levels here. Long entry, I mean a push back up to the upside. Because you have to understand market and price action. We're coming down here to what could be classed as a neckline support. And taking out this liquidation zone and a weekly support here of 137.50. And why do I call it a neckline? Because it could be the neckline of a potential head and shoulders formation. Left shoulder, head up here, come back down, make a neckline here, push back up, and if we are going to see a sell-off, we might see a sell-off from this right shoulder. So at the moment, I'm expecting price to push down into this sort of liquidation zone still. Take out this low. You can see this kind of a weak doji candle that's formed on the 4 hour. We've just taken out the prior lows here, but there's a bit of a weak candle here. Drop down to the 1 hour. There's a bit of a spike. I think we're going to just drop down, trickle down into that level at the start of the week, and from there we can expect price to have another move back up to the upside. So that's GBP JPY, potential sell-off before the move back up. USD JPY, it's a kind of similar situation to GBP JPY, and even Euro JPY. So you can see here on the Japanese yen pairs, that's what cross-referencing is great for, to understand, okay, I think that this is happening on Euro JPY, which is a Japanese yen pair. Do I see a similar situation happening on GBP JPY? Do I see a similar situation happen on USD JPY? And in this case, we do. So therefore, it helps me be more confident in taking a trade. The Euro JPY, I'm looking at a potential sell-off into the liquidation zone before push up. GBP JPY, similar situation, and USD JPY, looking for a sort of similar situation as well. This has been a very, very choppy pair. USD JPY tends to have a little bit of a move and then ranges for ages. This is a daily chart here, for instance. You can see here's a range 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. It has a move, then it has another little range. Has a move, now it seems to be making another little range here. But yeah, I do see that we made a high. I expect price to come back down, retest this low. If we can find support here and we see bullish potential, we can look for a long trade back up here as well. But I'd wait for this trade to potentially push back down here. Remember, expecting that US dollar weakness at the start of the week. And just go back to the dollar index. That remember, we need to find the US dollar index needs to find support here. If this breaks and pushes down, we're going to see all the other pairs like Euro USD continue their move up higher and go on to new highs. It's only if this holds a support that then we can look at taking a long trade. So remember, that's why the smart trade is to take the long trade first, as we expect the US dollar to get weaker at the start of the week. So to take the long trade on Euro USD, which is short in the US dollar, and the same on other US dollar pairs as well. So just going back to USD JPY, if we're expecting the dollar index to sell off first and then move up, remember the US dollar index, where the US dollar is the main currency pair here, we can expect a similar situation to pull back down here and then be looking for a move up. USD CAD played out nearly to perfection of what I said last week. Just to run over this and give you guys an insight. Remember, I said it's only sell trades on USD CAD. Was not looking for any type of long trade just yet. There's no sign of a reversal. A lot of you guys actually, I got a lot of messages on Instagram of guys who took this trade and made some pips, made some percentage on that. So well done. But yeah, I'm still only really looking for sell trades in USD CAD. So let's just have a look at where we were looking last week. Now, remember last week we looked at just basically really simple charts. Look how clean this is, guys. It's just one line just to show you the overall direction of the trend and the market. It's to the downside here. Strong daily trend line. So last week what we were looking at, drop down to the 1 hour time frame. What we were looking at last week was this to explained from here was the potential to pop up into 1.3270 to 1.3290, this sort of 20 pip region, to pop up here, and then we're going to see this sell off. Now, as I said, remember we were also looking at the US dollar index. Remember at the start of the video to maybe just had that little nudge up first before the sell off, but the bears on the US dollar were too strong, so it just started moving straight away. Here, the US dollar didn't have that little pop-up. I just wanted to see if we could take out here, but it seems like lots of you got into this trade, maybe after this trend line break. But yeah, we came out, and where did we go to? Exactly where I highlighted. Again, please go back to last week's video, episode 8, and just take a look. You can see here that we came down into that liquidation zone, and we took out that prior low. So we're from here, we had a nice sort of 100 pip move, and it came down even lower. You can see this area just sort of acting as an area of support, broke through, acted as resistance, and it kind of just continued to be choppy for the rest of the week. With USD CAD, as I said, really I'm only looking for sell trades at the moment. We're making low lows, lower highs, low lows, a little bit choppy here. I think we can look for short trades from this yellow highlighted region once again. So I'll just put that on there. So I'll be looking at potential short trades from, as I said, the yellow highlighted region, which is basically a liquidation zone on the lower time frames. So at the start of the week, we might just see price try and come back up, tap into this sort of area here, maybe back up into this region, tap back up into here. We can see that trend line is still sitting there as well, and we could see one more sell-off. So price comes back into here, I'll again be looking for a move down. Not really looking at anything new apart from that at the moment. I can update during the week. As I said, please look out for my Twitter and Instagram. But at the moment, there's nothing, even on the daily chart, you can see there's no bullish signs. So don't try and buy the bottom when there's no signs there yet. You can see here we're just pushing down, and it's very, very weak. The only thing that could potentially change the direction on USD CAD is what, guys? The only thing that could change, well, obviously the US dollar, but I mean, because we haven't seen any US dollar news on the economic calendar, what else could change the direction of USD CAD? Oil, the price of oil could change the price of USD CAD because of the correlation between oil and the Canadian dollar. So I'm going to look at oil in a minute, which also played out quite nice, and a few of you guys sent me your trades on that. So well done on that. Well, I'll get to that in a minute. But at the moment, unless we see a significant sell-off on USD CAD, on oil, which would mean a weaker Canadian dollar, which would push up USD CAD. Then I only see some more downside. So I do believe that, but perhaps on a pullback up into this region, then we can see a sell-off. We might come back up. You can see in this region, what would that come in confluence with? Another touch on this trend line. You may come up into this sort of area here, this liquidation zone, even this high from last week, because it could be stop losses sat above here, could pop up into here and then sell back down. So this is a potential trade, but I'm not looking at taking any buy trades at the moment on USD CAD. But I'll go to oil in a second. But what's on the flip side of USD CAD? Remember, inverse correlation is Aussie dollar, US dollar. This one looks a little bit messy, but I'm going to break it down. So this was last week's, again, please go back to last week's episode, explain that this is where price was on Sniper Sundays. This is where price was trading here. So explain that price was going to push up into this region and come up, take out this level, to not look for shorts. Again, even if you didn't take a trade, but this analysis may have stopped you from taking that short trade that maybe you're eyeing up. So maybe you're looking at taking a short trade on Aussie dollar, US dollar. And by me explaining that this was going to push up and take out these liquidation zones, and that's why I got these yellow highlighted areas here, that price was going to come up and take out this level before seeing any type of sell-off. So you can see here, again, we had a nice move up. Again, correlated, inverse correlation. There was a 100 pip move there with Aussie dollar to the upside, and there was a 100 pip move down on USD CAD to the downside, or 150 pip move to the downside. So remember, I kept saying that there's only going to be a sell-off. I only look for sells on USD CAD last week, so that hopefully would prevented anybody from taking long trades, but also helped you take the short. And then on the flip side of that was do not take any short trades on Aussie dollar, US dollar. Only look for long trades as we look to push up into this region. So that's now happened. That's now played out. We've now taken out this liquidation zone here. Now, what are we looking for this week? Again, at the start of the week, I think we could potentially see a bit of a sell-off on Aussie dollar, on the US dollar and the US dollar index, which would mean that this is going to push down. So I see price coming down, taking out this low. This low is too weak. Support. Any early long traders are going to get taken out. So I'm expecting price to push down into this region. Now, it's just questionable of how much of a dip we may see here. Aussie dollar has been bullish for weeks and weeks and weeks. It's so strong. We are looking like we are maybe losing legs and losing the momentum to keep pushing up higher. However, to look for a sell-off on this pair, we need to see some strength from the US dollar first. And maybe now that we've taken out the prior lows, the US dollar index may be ready for that in the coming weeks. But have we got the momentum to do that in the last week of August? That's questionable. So we have to remember, keep that in mind, as we might not get the real momentum until we come back into September. So I'm looking for a potential push into this region, a nice rejection from this area. We can look for a push back up. Again, this is an area where I think, similar to, I think, was it Euro USD, this red area, similar to that, I think that we're going to come up and definitely will take out this area here before any signs of a sell-off. So I'll be looking for price, I'll be watching for price to push back up here. And if it does back up into the sort of 72.20, 72.40 region, and if it comes back up here, and we see some resistance, take some profit, keep a percentage of the trade running. But remember, guys, something I haven't spoken publicly about yet, something that the community knows about, and one thing that everybody should know about is hedge trading, and something that if you guys want to know more about, I will explain on future videos. But what reason I'm saying it is because then there's an opportunity for a hedge trade here, because if we take out this prior liquidation zone, and see a drop, then we can make from the move up and the move down. Now, why would we be looking for a sell here? Because we go back to the US dollar index. Remember, if the US dollar index pushes down here, this is that liquidation zone, or this is that all-important higher low area. So higher high, higher low, higher high. If this breaks, more downside to come for the US dollar. This is a very, very important level coming in for the week ahead. And that is about it. Let me just go to oil. This is gold. Gold. Actually, I think I missed off gold last week's Sniper Sundays. Yeah, actually played out quite well. This is Sniper Sundays. I expect it to push up, then take out this liquidation zone here on the lower time frame, which you can see here, and then have a push back up into this region, and it more or less played out as I thought it would. Now prices come back down. Prices come back down. I don't see a sell-off in gold yet. Prices come back down. It's a really, really clear chart, guys. Sorry, I didn't have this one quite analysed clearly because I just left this since last week. But yeah, we came down into the liquidation zone I was looking to long from last week. Price moved up nicely as expected. Then we came back down. We've taken out that liquidation zone. So this came down and took out the lows on the prior 1 hour. See here, we dip below this low. What did I say at the start of the video? Price 90% of the time will take out the prior low before making a real move. So you can see here, price came down, false move before the real move up happened up. Took out that prior low, moved up. Now we've actually come all the way back down and we're now taking out these lows here. So again, retail traders seeing a support here, seeing a support here, seeing support, support, support. What do 95% of retail traders do? They take a long position and leave the stop loss just below these previous lows. Bang, little spike through on Friday, I think that was. Take out those liquidation. Now we look set to make a move back up to the upside. And this coming week, I would expect, I think I'm expecting gold to come back up and take out this high here. So potentially coming back up to 2000 to 2020 this week on gold. So I'll be watching out for that. And then oil was one where I said quite a few actually made some money on this one and showed me your trades. This one was kind of called very, very well. So a few things that you guys took from this last week was I had some messages from people, public who haven't been in the community, and just took some notes that I said about how oil likes to have a fake out. We can see here since market open on Sniper Sundays, last night Sniper Sundays price moved up, pulled back down, retested this area to look at potential long trade, and then from there I had this level highlighted. From price was trading here on Sniper Sundays, explained I expect the price to push back up into this region before seeing a sell-off. And then we can see here, just on the 2-hour chart, see here that price just tapped this, sold off, came back up, sold off again, came back up, sold off again. So there were various points to get in and see a sell-off. It kept pulling back, but it has held strong as an area of support. And now we can see here that we keep adjusting these triangle formation, or keep adjusting the trend lines. You can see here that now what we've done, we came down. So price came down, took out, had a fake out of this triangle again. Fake out, liquidation from these levels, push back up to the upside. Adjust the trend line. Watch price has come back up, held at that resistance once more, and came back down and done what? Taken out that liquidation again, taken out that prior low, and had another fake out on this triangle. So at the moment, it looks like oil could actually have another push back up to the upside. And I think with all this resistance here, I can see price pushing back up into that region before any sell-off. This could actually come up and take out the prior highs. So I'll be looking at long trades at the moment on oil. I think we could push back down, maybe retest this, retest the trend line, the triangle formation, maybe retest the bottom of this sort of area of support. See here we've got support. Price can come back down, retest this area of support, and we can look for a push back up to take out those prior highs. Now, if oil does push back up to the upside and takes out prior highs and makes a new higher high, or any strength from oil at all to come back up to sort of this region and take out this liquidation zone here. Let's highlight that in red for now. Is going to see USD CAD push down lower because of the strong, because oil's strong. So as I said, guys, I'm going to be more actively trading myself now, and also showing the property side of things as well. But yeah, I'll be planning to trade every day this week, as long as the market gives us the opportunities. Remember, never push a trade, never go searching. Have patience, sit back, let the market come to you. And remember, anything can change at any time, so have no ego. We'll see what the market does. We've got a sort of blueprint to and an idea of what the market's going to do. Now we wait and be patient to pull that trigger. As I said, I'll be showing a lot more of the trades this week on my Instagram and on my Twitter. So so head over there and take a look at that. But other than that, I will catch you guys soon. Let me know your thoughts, and yeah, we'll catch up soon. And if not, on Sniper Sundays next week. Thank you.